Good morning and welcome to What's Up Monday. This is Dominic Chiricella from the Energy Management Institute, and I hope you had a good trading week and a hedging week last week, and I certainly hope this week will be even better for you. Again, if you're interested in subscribing to our publication, you can see the subscription details down below. Or if you have any questions after the presentation, please feel free to contact me at dchiricella@emi.org. I'd love to hear from you and answer any of your questions. So, with that, let's get started and see what's happened and what's facing us so far this coming trading week. So let's look at some of the price charts here. Crude WTI, although it's lower this morning, remains in an uptrend. It's in the upper half of the linear regression upward sloping trading channel. It's been unable to break out to the upside yet, so I would expect to see it continue. And again, remember, oil has been in a cyclical trading pattern. That pattern suggests maybe we get a little bit of a correction to the downside before we move to the next upward cycle. Here's the June WTI contract against the spot Brent contract, which happens to now be the June contract. Again, similarly, we're seeing upward moving regression channel here. Both of these markets remain in the upper portion of the channel. And the thing of note is the Brent contract. It's got a little bit stronger upward sloping trajectory than the WTI contract, which is a little bit milder here. And that's been supportive of the Brent WTI spread. And speaking of the Brent WTI spread, that's moved nicely to the upside and kind of tested the highs going back to the beginning of the year. Since then, the last 3 or 4 days of last week, we've kind of retraced here a bit. We're still in the upward trending channel, but now we're in the lower half of that area. Technically, it's looking like maybe some downside exposure to the bottom of the trading channel, and the MACD moving average convergence divergence is looking like it's a lagging indicator, but it's looking like it's crossing to the upside. So we'll have to watch that spread right now. The June Brent WTI Houston spread, not much different. A little bit stronger in that it's still in at least the upper end of its trading channel there. Simply put, the economics of exporting crude oil from the United States are still pretty strong, and that's going to continue. I don't see any change in that in the short term. And again, when we look at that Brent WTI spread, as we've seen for the last couple of weeks, we're hovering around the 5-year average. Again, we would expect I would expect to see that continue unless we start seeing another shift in the Cushing inventories and U.S. inventories moving further or more steeply to the downside. I would expect to see trading around that 5-year average. I don't see a lot of volatility coming from the spread in the short term. Again, barring any major geopolitical event that we don't know about yet coming from the Middle East or any major change in the inventory pattern here in the United States. Let's move over to products a little bit. We can see both the diesel, ultra low sulfur diesel contract and the RBOB contract have pretty much been following the overall crude oil and the rest of the complex. What we see here is the diesel contract a little bit stronger to the upside than gasoline. Gasoline's kind of in that shoulder period where we're getting close to the summer driving season, but not quite there yet. So we're seeing some transition products have been changing. Refineries have still been undergoing some maintenance and running at the lower end of the 90% utilization rate. So for the moment, products are more following. We're going to have to see how this evolves here in the next several weeks as refinery runs start cranking up. If we start seeing more of a decline in crude oil stocks compared to what is expected to be seasonal builds in some of these products, especially in the ultra low sulfur diesel product. I think we're going to have another very strong week. We don't have a lot of huge economic data, big numbers. Tuesday, Chinese GDP. Obviously, everybody's going to be watching that if to see because obviously it directly correlates back to Chinese consumption of oil. In the U.S., not a lot of market moving, huge market moving elements, but there's some, and there'll be some impact on the global equities and the U.S. equities from that. So I think we're going to have, in conclusion, I believe we're going to have another very, very volatile trading week. I suggest you keep your seatbelts on. I suggest you utilize tight trailing stops for any of the asset positions that you do trade, and be cognizant that oil price direction is not only going to be impacted by its own short-term fundamentals, but it will be impacted by what's going on with the evolving situation or the geopolitical situation in the Middle East, and it's definitely going to be impacted by the direction of the dollar and the direction of equities overall. So I hope you have a great, successful trading week. If you have any questions, feel free to contact me at dchurcheller@emi.org. You can go to our website for putting other people on our trial. You can subscribe to our program. So I hope to talk with you again next week. And as I said before, have a very successful trading week. Thank you for listening.